All right, let's dive in. We're going to talk about the top 5 mistakes that pretty much every new financial modeler makes. By understanding these, you can build much better habits right from the start and create models that are actually accurate, flexible, and, professional.
So let me ask you something kind of weird. What in the world do playing the guitar and financial modeling have in common? I know, it sounds like the start of a bad joke, but there's a real answer.
Well, they both have this learning curve that's just full of rookie mistakes, and honestly, that's a good thing, because once you learn to spot these classic blunders, you're on the fast track from beginner to pro.
Okay, so here's our game plan today. We'll kick things off with some common formula fails. Then we'll zoom out and look at some critical structural flaws. After that, we'll talk about the modeler's safety net, and finally, we'll wrap it all up to get you from rookie to reliable.
First up, common formula fails. These are those tiny errors that seem so innocent but can have huge consequences down the line.
Okay, mistake number 1, and this is the big one, folks, is hard coding. All this means is you're typing a number, say a tax rate, directly into a formula, instead of linking to a cell where that number lives.
Just look at the difference here. On the left, see that 0.25? It's just typed right in. That's the wrong way. It makes your model totally rigid. If that tax rate ever changes, you have to go on a treasure hunt to fix every single formula. But on the right, see what links to cell B5? That's the right way. It's a tiny change that makes your model dynamic and, actually usable.
So, how do you fix this? It's a super simple 3-step habit. First, create a dedicated assumption section. Put all your inputs there. Second, link every single formula back to those cells. And third, this is a great pro tip, color code your input cells, maybe with a blue font so you can spot them in a second.
All right, on to mistake number 2. You ever seen a formula that looks like this? It's a monster, right? A huge nested if statement trying to do way too much at once.
Look, it might feel super smart to write a formula this complicated, but it's a trap. Seriously. They are impossible to read, they're a pain to explain, and they are an absolute nightmare to debug. A tiny mistake can hide deep inside, and you'll spend hours, trust me, hours, trying to find it. The goal is clarity, not complexity. Always.
The solution is actually really simple. Just don't do that. Don't build one monster formula. Instead, when you have a complex calculation, break it down. Break it into smaller, logical pieces. Use separate rows, or what we call helper columns, for each little step. It makes your logic crystal clear and so much easier to check.
Okay, so we've talked about formulas. Now let's zoom out a bit, because bad formulas can be a symptom of a much bigger problem. Critical structural flaws. We're talking about the very foundation your model is built on.
And that brings us to mistake number 3. And I'm just going to be straight with you. A messy model is an untrustworthy model. I don't care if your math is perfect. If your spreadsheet looks like a disaster, nobody is going to trust your work. It just screams, I don't pay attention to detail.
I mean, the difference is just night and day, isn't it? On the left, you've got this chaotic mess. You can't even figure out where to look. But on the right, that's a professional model. It's clean, it's organized, the formatting guides your eye. That's the standard you're aiming for.
And getting to that professional level, it's all about discipline. It just means being consistent. Use a clean layout, use clear headings, format your numbers and dates the same way every time. And use a simple color code, like blue for inputs, black for formulas. These rules don't just make it look pretty, they make it believable.
Okay, mistake number 4. Another big structural flaw. So many beginners build their financial statements like they're 3 separate islands. So let me ask you, are your income statement, balance sheet, and cash flow statement actually talking to each other? Because if they aren't connected, your model is basically broken. You have to master these 3 key links. Net income has to flow from the income statement to the cash flow statement. The ending cash from your cash flow statement has to become the cash balance on your balance sheet. And things like depreciation and CapEx, they link all 3 together. These connections are what make a model a living, breathing thing.
All right, let's move on to our third section, the modeler's safety net. This is all about that final, absolutely critical step of checking your work, a step that you'll see a lot of beginners just skip.
And that brings us to mistake number 5. Here's a little secret every pro modeler knows. You will make mistakes while you're building. Everybody does. So the real mistake isn't making an error. It's assuming your work is perfect and not building in checks to prove it.
I mean, after all that work, how do you prove your model is balanced? How can you be 100% sure that everything is working mechanically the way it's supposed to?
Well, here it is. This is the golden rule of financial modeling. You have to build a balance sheet check. It's a dead simple formula, usually right at the bottom of your balance sheet. It just takes your total assets and subtracts your total liabilities and equity. And this is the number you're looking for. A big, beautiful zero. Every single time, for every single period in your model. When that line is all zeros, you know your balance sheet balances. It is the ultimate stamp of approval that your model is mechanically sound.
Okay, let's bring it all home now. From rookie to reliable. This is all about taking these lessons and really changing how you approach building a model from the ground up.
So what did we learn? It really boils down to these 5 things. 1. Keep your inputs separate from your formulas. 2. Go for clarity, not complexity. 3. Be disciplined with your formatting. 4. Master those 3 statement links. And 5. Always build a balance sheet check. If you can turn these into habits, you're not just avoiding mistakes. You're building models that people can actually understand, trust, and use. You've learned the rules of the road. So the only question left is, are you ready to build your first model? Even if it's just for a lemonade stand. Let's get started.